What if Ripple is preparing for one of the biggest crypto IPOs in history? And what if major banks are already pricing it in? Welcome to CryptoIQX, where we break down XRP news in simple and clear terms so you can understand what is really happening. There is strong discussion right now about Ripple potentially going public in 2026. Reports show that DBS Bank, the largest bank in Southeast Asia headquartered in Singapore, has valued Ripple at $11.3 billion ahead of a possible IPO. That number matters. When a traditional financial institution publishes a valuation before a company even goes public, it signals serious institutional attention. DBS has been working with Ripple for years, especially in cross-border payment solutions. This is not random speculation. It reflects long-term collaboration and growing trust in Ripple's infrastructure. Ripple CEO Brad Garlinghouse has previously stated that 2026 is a public target for a potential IPO, and the timing aligns with improving regulatory clarity and expanding global adoption. If Ripple goes public, it could change how the market views the company. An IPO would increase transparency, attract institutional capital, and potentially strengthen partnerships with banks. It would also separate Ripple's corporate valuation from XRP's token price in a clearer way, though the two are still connected through ecosystem growth. Many analysts believe additional bank valuations could appear over the next 6 to 12 months. If those numbers rise, it may signal growing confidence in Ripple's long-term business model. Ripple continues positioning itself as a challenger to the traditional SWIFT system, especially in international payments. This moment is important because it shows that traditional finance is no longer ignoring blockchain companies. Large banks evaluating Ripple ahead of a public listing suggests that digital asset infrastructure is being taken seriously at the highest levels. At a recent event, Ripple CTO David Schwartz discussed expanding functionality on the XRP ledger. This is where things become very interesting. The XRP ledger was originally built for financial use cases. It already includes a decentralized exchange, issued assets, escrow functionality, and fast settlement. Transactions settle in 3 to 5 seconds with very low fees. But now there is discussion around expanded lending functionality and more native financial tools. If Ripple were to operate as a regulated financial institution in the future, it could open the door to new services. Imagine being able to use XRP as collateral within a regulated banking framework. That would bring blockchain assets closer to traditional finance in a meaningful way. Banks trust other banks because of regulatory requirements, reserve verification, and compliance standards. If Ripple strengthens its banking relationships or expands further into regulated financial services, that trust level increases significantly. This would position Ripple as a core infrastructure partner rather than just a fintech provider. Beyond lending, XRP continues to serve as a bridge currency for cross-border transactions. On-demand liquidity removes the need for pre-funded Nostro and Vostro accounts, which can lock up billions in capital globally. This efficiency is one of Ripple's strongest long-term value propositions. There are also major opportunities in micropayments. Traditional systems struggle with small transactions due to high processing costs. XRP's low fees make it possible to pay small amounts, such as a few cents, to read a single article or access digital content. That opens new revenue models for publishers and digital platforms. Additionally, XRP is being explored in tokenization, institutional settlements, and potential central bank digital currency frameworks. These use cases continue expanding the ecosystem. A recent discussion raised the question, what would it take for XRP to reach $2,500? The answer is simple but powerful. It would require massive global macroeconomic changes combined with a supply shock. There will only ever be 100 billion XRP. That supply was created at launch, and no additional tokens can be minted. A small amount is burned over time through transaction fees, making the asset slightly deflationary in structure. Price is not determined by total supply alone. It is driven by available liquidity on exchanges. If large amounts of XRP are removed from trading platforms and held in cold storage or institutional custody, the circulating liquidity becomes thinner. When demand rises while liquid supply decreases, prices can move sharply. Data shows that XRP balances on exchanges have been gradually declining. If that trend continues while institutional interest increases, volatility could rise. Low exchange liquidity combined with growing demand can amplify price movements. However, reaching extreme price targets would require widespread adoption, regulatory clarity, institutional settlement usage, and potentially macroeconomic shifts in global finance. It would not be the result of a simple switch flip. It would require real structural change in financial systems. Understanding supply and demand dynamics is crucial. Market cap calculations often confuse investors. What truly matters is how much XRP is available for purchase at any given time and how aggressively buyers compete for it. Ripple recently partnered with a global fintech incubator to launch an XRP Ledger Accelerator program in Singapore. This initiative focuses on real-world asset tokenization, institutional decentralized finance, and AI integration with blockchain. Singapore was chosen because of its strong regulatory clarity and thriving fintech ecosystem. The region hosts hundreds of blockchain companies and continues attracting digital asset innovation. Supporting early-stage startups building on the XRP ledger increases long-term network utility. The accelerator offers non-equity grants and mentorship to help developers build enterprise-level applications. This approach strengthens the ecosystem organically, rather than relying only on speculation. There is also renewed discussion about Ripple's early history. Roger Ver recently mentioned involvement during the early development phase alongside Jed McCaleb and David Schwartz around 2012. The idea at that time was to create a system similar to Bitcoin, but without energy-intensive mining. That vision led to the consensus mechanism used by the XRP ledger today. Understanding the origins helps explain why XRP focuses on efficiency and scalability. From the beginning, the goal was practical financial utility rather than mining rewards. Regulatory clarity remains one of the biggest factors influencing digital assets in the United States. Upcoming legislation, including the proposed Clarity Act and related stablecoin frameworks, aims to establish rules for digital asset markets. Clear regulation would define how digital assets are traded, how brokers operate, and how companies issue tokens. For Ripple and XRP, clarity reduces uncertainty and encourages institutional participation. When regulatory risk decreases, capital often becomes more comfortable entering the market. If the United States creates a structured framework for blockchain-based finance, it could strengthen America's global financial position while supporting innovation. This type of policy environment could also support Ripple's long-term IPO ambitions. Between potential public listing plans, institutional valuations, ecosystem expansion in Asia, increasing exchange withdrawals, and evolving regulation, XRP sits at a critical intersection of technology and global finance. The next 12 to 24 months could define whether Ripple transitions fully into mainstream financial infrastructure or remains a niche blockchain provider. If you found this breakdown valuable, make sure to follow CryptoIQX for consistent XRP updates and deep analysis.